right. 5 o'clock exactly. Ladies and gentlemen, welcome to today's stream. It is Monday, 1 minute past five exactly speaking, and it is the 19th of January. I think we're into the third full week, the third full trading week of January, and things are looking a bit weird, man. Things are moving in a way that is going to provide us an opportunity to learn a whole lot more. So that's quite the segue. Shout out to everybody in the chat. Welcome to another version of Just Markets Live, guys. Remember, time is money, and this time is that money, all right? This is where you come through for your daily dose of market moving data. Shout out to everybody in the chat. Shout out to everybody joining on Instagram. If you're watching this on YouTube, retrospectively, because when I recorded this, I was live, please do share, like, and subscribe and join the channel. You feel me? Let's create a movement, let's create a community, and let's give our friends some tradable information. Okay, I'm not here to talk about myself or my journey or describe my car or the place that I live or my financial situation. No, I'm here to talk about key economic data. I'm here to talk about the stuff that we're trading, the real usable insights. So, with that being said, ladies and gentlemen, welcome to another stream. All right. First and foremost, boys and girls, what I'm going to share with you today is not investment advice. All right. This is not a platform for me to come here and tell you what to buy or sell in terms of financial assets. I'm not here to tell you what to do with your money. What I am here to do is point you in the right direction. So remember, this is for educational purposes only. Secondly, boys and girls in the chat, we're sitting at 44 in the chat on the live stream, all right? Please do not share your personal links to your group, all right? This is not an opportunity for you to market. Please read the room, scan the landscape. This is neither the place nor the time for you to be doing that. So just be comfortable, get a notepad out. If not, you can just watch this retrospectively. I'll upload it on my personal channel on YouTube. That's Mr. YEC, sir. And then you can look back at the topics that we discussed today, just so you can plan your week around the news that is actually moving the market right now. So, all right, let's lock in, boys and girls. Shout out to everybody in the chat. And that moves. I see the president has joined us today. Shout out to LSG Lutwalo, my dog. Are you well? All right, guys, let's lock in because the market right now is lying with a straight face. That's my segue. I think gold is lying with a straight face, guys. I think the US dollar index is lying with a straight face. Gold is still on the front foot. The dollar is still holding its ground, guys. And that's despite the Fed Watch tool screaming one thing loud and clear. Rate cuts completely off the table, guys. The FOMC that we're going to get in January, it's a few days away. I think it's about a week or so out, a week and a half at the most. All right. We've completely taken the probabilities of an interest rate cut at the next FOMC, ladies and gentlemen. We're sitting right now at a 5% probability that we might get an interest rate cut. And in theory, that should move the dollar on ahead and move gold down. Because again, remember, boys and girls, gold is severely sensitive to any inclination of lower interest rates. So the question I'm asking is very simple. If the Fed and Jerome Powell are not going to cut rates, why is gold not backing down? I think that's the question we need to answer, because if we can answer that, then we can trade into this environment where we're seeing that macroeconomic data is not the trade. The trade right now is protection. All right, we've got geopolitical instability. We've got growth concerns from the US. All right, we've got slowing growth, and Thursday's GDP data is going to be the catalyst, in my view, that's going to make or break that narrative. Because right now, there's a narrative that on the surface, the US looks like it's doing fine. However, if you look underneath the hood, you might see signs of slowing growth, and that's why traders are still pricing in interest rate cuts with a high extent for the year 2026. All right. But I think that narrative is going to fall apart, ladies and gentlemen, because here's the truth. This isn't a rate cut trade anymore. Usually we trade gold and the US dollar based off of macroeconomic data, the data that signals towards either cutting interest rates, holding them at the level, or increasing interest rates, because all of those three functions have an impact across the whole financial spectrum. All right. That's why I keep saying that we're in the midst of a protection trade right now. All right. CPI has cooled. Hasn't collapsed though. Okay, we're still above 2.6%, and we've been hovering between 2.6% and 3% for the past 8 months. So we're still seeing inflationary pressure still being sticky. All right. So that's why I say CPI hasn't cooled. Well, it has cooled. I beg your pardon, but it hasn't collapsed by any stretch of the imagination. Now, when we get to the jobs front, boys and girls, NFP has showed some job growth. All right, the job growth has been slowing, but not breaking. When it comes to the unemployment rate, we saw a downward revision to the last unemployment rate that we got, which was a staggering 4.7%, if I'm not mistaken. 4.6 or 4.7% handle. That's where we're at. And as far as the unemployment rate is concerned, and just for perspective, because I always say to you guys, you cannot take this information in isolation. You need to contrast it towards something. When you look at the overall unemployment rate in the USA, for the year 2025 right throughout. The last unemployment print that we got, either in November or in December, was the highest for the year, meaning joblessness was at its highest point in 2025. All right. That since got revised down, and now we're sitting at a 4.4 or a 4.3 handle. Someone in the chat can correct me there so we can have the specific data, but we're in that handle. All right. Retail sales, because now we're going to be talking about spending and PPI. That reminded us, I think that was last week, if I'm not mistaken, all right, that the US consumer still has teeth. The US consumer is still reaching down into their pocket, okay? And that is strong enough to keep the Fed cautious, all right? And we're seeing that as evidenced by the Fed Watch tool, guys. It's not strong enough to kill recession fears, but it is not strong enough either it's not weak enough either to make the Fed want to cut right now. And that's the sweet spot for gold. All right. Not panic, not euphoria, uncertainty. That's where we're at right now. And I believe if you look at the gold chart, that is why we have a gap on gold. All right. I will go to the technical analysis on gold. But before I do, I want to talk about the dollar because before we go anywhere on the financial spectrum, we need to discuss what is happening with the US dollar because everything else trades in relation to that. So, chat, as you can see on the screen, I've got the US dollar index pointed out. Beautiful technical analysis on the US dollar index. I'm going to highlight the key points of interest here. We've got the low of our range around the 96 handle. Okay. We've got the high of our range culminating in a double top. And this is around the 100 handle. All right. On the DXY. We've got a double top there. Beautiful double top neckline right here at the bottom. And since then, we had a beautiful uptrend that was since broken and invalidated around the 99 handle. As you can see, this bit of price action here. Again, for those of you that are joining me on Instagram, guys, please do click on the link in the comment section. I've already pinned it. You'll be able to follow along. Otherwise, retrospectively, you can sit and just enjoy the show. I will upload this on my YouTube channel so you can watch it at a time of your choosing where you can follow on the screen. Since that breakout, ladies and gentlemen, I'm gonna make this very easy for you guys. All right. The price action that we're seeing is a series of lower lows and lower highs culminating in bearish continuation patterns. You can see a small bearish continuation pattern over there, sort of like an ascending channel, and we can see a larger potential bearish continuation pattern there, and that is also an ascending channel. Now, what I do want to make easy for you here is because all of this price action can be a bit confusing. So what we have here in principle is very, very simple, boys and girls. From the double top, we've got a lower low, we've got a lower high, we've got a new low right at that point. Ignore everything else in the middle there. This is still a lower high, ladies and gentlemen, in relation to the overall structure. So as price action would dictate, all right, beautiful English there, I can't even lie. In theory, we should be moving lower down on the US dollar, all right, to come and revisit that previous low that has been created. But the price action is still tricky at these elevated levels. And I believe that that is because of the forward-looking guidance that economists are expecting that we could potentially get a rate cut. Man, it makes no sense to me. I can't even lie. The Fed Watch tool is sitting at 5%. There is no reason why they should cut rates. However, the market is still confident that Jerome Powell could pull one over our eyes at the next FOMC or the one after that. It's all about the forward-looking guidance, all right? But the data does not support a rate cut, and neither does the Fed watch tool. So right now, what we're seeing is a bit of behavior in the market that we have no answer for right now. Okay, well, I mean, that's actually the wrong way to put it. We do have an answer for it. I told you it's the protection trade. It's geopolitical instability. We've got the flare-ups in Iran. We've got the Venezuela shit happening. We've got the threat of Greenland being invaded. So there is a lot of geopolitical turmoil in the ether right now, and that is lending to the risk complex. And I believe that that could be part of the reason why we are seeing gold still on the front foot, despite the fact that we've had a bit of resilient US economic data. Now, speaking of US economic data. Ladies and gentlemen, the big day is definitely going to be Thursday. All right. That is what matters for this week. I want to push your attention towards the US economic calendar for the week. And what we see straight out from the bat today, nothing really important is happening. It's a holiday. I think it's Martin Luther King Jr. I could be wrong, bro. I stay all the way in South Africa, man. I'm okay with being wrong on that one. All I do know is that it is a holiday. Someone in the chat, please do correct me. We're sitting at 56 strong in the chat. Shout out to everybody. Throw me some W signs, all right, in the Q&A section. Gerald in the chat says, do you think gold would reach $5,000? Absolutely. I do believe. Peace Mashaba says, no rate cut, yields stay high, USD up, gold down. That's what I'm saying as well, Peace. That is the equation in theory. Shout out to Melvin, Mr. Cash in the chat. I haven't seen you in a minute, bro. That is the way that is the way the cookie's supposed to crumble in theory. No rate cut, bond yields stay up, US dollar stays elevated, gold sees some downward pressure. That is the equation. Yet we are not seeing that, bro. And that is why I put it to you guys. There's an opportunity for us to learn some shit here. I can't even lie. Every time I am confused by the dynamic that I'm seeing um, versus the economic data and the price action reaction, because all of this stuff has an action reaction function, ladies and gentlemen, all right? So every time I'm not seeing the correct action reaction function, it's a gap in the knowledge. And when there's a gap in the knowledge, there's an opportunity for us to learn some new shit. Okay? And that always excites me. Obviously, it comes with a few blown accounts, but hey, that's the price of doing business, man. That's the cost of tuition sometimes. Sometimes you got to press some buttons to find out. All right. And I've been doing a whole lot of pressing last week and it didn't work out. Okay. Last week it didn't work out. I thought gold would fall in theory. However, it didn't. It stayed locked in a range. All right. Now, so what I want to do is let's have a look at the economic data for the week. So the first big one, Donald Trump is speaking, I think tomorrow. We'll hear what he's got to say. If there's still some more threats laid out to the respective NATO countries, I believe that the risk complex is going to lend itself towards gold, and we will continue to see upside momentum when it comes to the yellow metal. Siposetu in the chat says President Donald Trump is a major driver of the current rate cut conversation. I like the way you type, my friend, but for two very different reasons. His direct political pressure on the Fed and Jerome Powell, and a specific proposal to cap credit card rates. Shout out. I think that's the comment of the day. I don't even know why you're here, bro. You don't even need me. At this point, we are saying the same thing, but I love that if you're a part of the community, oh, that's ankle dollar. I bet, not ankle dollar. Shout out. I love the fact that we've gotten to this level where we can meet at the same level in terms of the conversation and the quality of the topic that we're saying. Everything that he just said there is spot on. The whole rate cut conversation is generic. No, 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 no. Generic is not the word I'm looking for. The whole rate cut conversation is superficial. That's the word I'm looking for. It is very superficial. It's not rooted in reality, all right? It is being forced onto the market by the narrative that is being pushed by Donald Trump. Donald Trump wants lower rates. It favors his presidency. It makes the cost of capital cheaper. It makes the economy a bit more robust. There'll be more spending, and that'll generally make it look like the US is in a good position because the cost of capital will be cheaper. People will have more money in their pockets in the end of the month. So that will do well for his presidency. And that is why Sipho Setu just articulated that the direct political pressure on the Fed chair, Jerome Powell, the criminal indictment that is potentially on the back burner could be used as a, how can I put it? This could be used as a stick to beat Jerome Powell over the head to finally pivot and cut rates maybe by a supersized 50, all right, over the next two Fed meetings. But guys, if you know anything about Jerome Powell, is that man does not bend or buckle. Okay. I believe that this might just be the catalyst that's going to make him actually stand firm and show that the Fed is apolitical. Because if the Fed is being seen to bow to political pressure, ladies and gentlemen, gold is going to go through the roof. Okay. And so he's trying to hold the line for the sake of long-term stability for the Fed. I don't think this is no longer about Jerome Powell himself. It's about the Fed as an institution. Will it hold the line and deploy monetary policy in a responsible way that is data dependent, or are they going to buckle to political pressure? That is the conversation right now. Alas, we digress. Thursday is the main event, ladies and gentlemen. As you can see on the screen, we've got third quarter GDP data. What I said to you guys in my segue was that the reason why gold is still on the front foot, besides what that beautiful comment just measured, that there's still the rate cut conversation that's being artificially manufactured by Donald Trump and all the pressure is putting on the Fed, we do have the slowing growth concerns. All right. And that is why I believe that the third quarter GDP data from the US is particularly going to be really, really important this week. All right. Because that's going to either make or break that narrative. The previous data, or the previous reading for GDP estimates in the US was sitting at a 3.8%. All right. The estimation, or rather the projection for Thursday, is a beat on that figure from 3.8% all the way to 4.3. Now, if we get this piece of data landing as is evidenced by the projections on Wall Street, that will definitely kill the conversation that the US has slowing growth data. And if that conversation does die, then I believe that does kind of open the gateway for gold to fall more back in line with what the Fed expectations are for rate cuts. Okay, we've also got initial jobless claims and the massive one, the mission critical one. WrestleMania is definitely the core PCE inflation data. That is going to be the make or break, or rather seal the deal for rate cuts in January or not. Chat, what do you think? Those three pieces of data, what do you think? Like I said, first up, US GDP data. Markets are expecting a growth. We saw that in the economic calendar there. Let me just check if I read that data correctly. There's a 3.8 figure, there's a 4.3 figure. Yeah, the previous data was 3.8. The consensus is that we'll get a 4.3, so a beat on the figure. All right, so I am correct in my assessment of that. So markets are expecting a growth to show itself. If GDP does confirm, like the narrative that is being spread on Wall Street right now, that the economy is decelerating, the dollar is going to lose momentum, rate cuts are going to be priced in, and gold is going to catch another bid. If GDP data surprises to the upside, ladies and gentlemen, expect short-term dollar strength. Expect some pressure on gold, but don't confuse that with a trend reversal just yet, because we need other dominoes to fall in line as well. We need to see initial jobless claims lower. All right. We need to see, no. I'm lying. For the sell side scenario on gold, we need to see higher initial jobless claims. We need to see the labor market in distress. So if that does happen, then we will see gold go up again. All right. But if we want to see the sell side scenario for gold, then we need to see claims coming down. We need to see that the evidence that the labor market is not in trouble, which gives the Fed more room to keep interest rates higher for longer. And that is the sell side scenario for gold in theory. And that's if it behaves according to the norm of what we're used to in terms of the action reaction function from the data. The main event, though, guys, PCE inflation. All right. This is the Fed's favorite child. honestly speaking. If the inflation data comes in softer, the market is definitely going to front run rate cuts, even if Powell doesn't want them priced in just yet. All right. Lower inflation data gives the Fed more room to cut interest rates. And I feel like the market is going to force his hand and front run rate cuts, even if Jerome Powell is not saying those words out of his mouth yet. And we're not seeing that from any Fed speak. I believe that that's going to be the rocket fuel for gold. All right. If we get lower inflation, okay, let me back up. Let me back up. GDP data. If we want to see gold go up, we need to see bad news for the US economy. So we need to see lower GDP data. We need to see higher initial jobless claims. And we need to see, well, in the inflation category, it's not bad news. We need to see good news. We need to see lower inflation. And that is the trifecta, the three dominoes that need to fall if you are positioned to the upside on gold. If you are positioned to the downside, it is due a pullback. I can't even lie. We need to see good news for the US economy. So if we see GDP data that's on the front foot, that's showing that the economy is growing. We see lower initial jobless claims. For those that don't know in the chat, initial jobless claims is the UIF equivalent of the US. So that's unemployment insurance benefits. When you lose your job, that's the thing that you claim for. So that's an indicator of the overall strength or weakness of the labor market. And just for interest sake, guys, it is the most real-time data print that we get for the labor market. NFP only comes around once a month. Initial jobless claims 4 times a month. All right. So it's the most real-time pulse of the market that we will get. All right. So those are the two scenarios. And to add a bit of spice there, we got to add in the geopolitical tension, guys, especially around Iran. All right. Because suddenly gold won't just be a trade, it's going to be insurance. If the conflict in Iran escalates, go to the moon. All right. Coupled with the slowing growth narrative, coupled with if inflation does go down, then it's a perfect scenario to see gold move to the upside. So here's the play, in my view, just to wrap things up nicely. Don't marry a bias, guys. Be data dependent. Marry the volatility. Watch the GDP data. Respect the jobless claims and treat PCE inflation like the trigger it is. Because when inflation, growth, and geopolitics collide, guys, that's when the real money moves. All right. We've got to stay sharp. All right. Over the next 5 days, we've got to stay sharp because the FOMC meeting is coming up soon. And what I want to do is just have a quick look at the Fed rate, the Fed watch tool. So just for interest sake, I was checking this out earlier, guys. Um, for January, let's check the FOMC probabilities. All right. So for on the 28th of January, when we get FOMC, the probability that we get an interest rate cut is 5%. That's non-existent. All right. Let's go to the next one. The next meeting after that is in March. Let's check out the probability. The probability of getting a cut is sitting at 20% for March. Let's go to April. The probability of getting a rate cut in April is 31%, still below 50, guys. Let's go to June. The probability of getting a rate cut in June is at 45%. All right. The first time that the rate cut odds really go to a level that is above 50% is not even in September, guys. So that's where we're at right now, guys. It makes zero sense why gold is marching on ahead, gapping out straight out the open on a Monday morning when we're not even sitting at a 50% level all the way up until September 2026 that we're going to get an interest rate cut. Make it make sense. We need some Fed speak. We need Jerome Powell to come out and say some shit. We need Christopher Waller to come out and say something. Mari Daly, where are you? Mary Daly, where are you? We need all the Fed people to come out and say some things because it's not make sure right now. Like it's really not making sense. All right. Finally, let's do some technical analysis on the US dollar index. First up, we've got all right, we've got a scenario. Let me paint out the scenarios. All right. In the scenario that we get good economic data for the USA, strong GDP data, low initial jobless claims, higher inflation data, we can expect to rotate from the upside there. Definitely. That coincides beautifully with this trend line where we've got buy side pressure at the points of interest, and our next point of interest culminates in our previous higher low level. Okay, and that is the area of interest that we need to be looking at because if we get the data bouncing off, I mean, if we get positive economic data for the US, like I said, higher GDP, lower initial jobless claims, higher inflation data, that is the upside scenario for the DXY. That's a situation that sees Euro USD selling, GBP USD selling, USD CAD going up, USD ZAR going up. I'm not going to say anything about gold just yet because we've got that whole unknown of the geopolitical instability and also growth concerns from the USA, which are leading people to price in interest rate cuts, even in the face of a Fed watch tool that says, no bueno, no bueno, you ain't getting nothing. Okay, so yeah, all we can do is just wait and see. It's another one of those moments as a trader where waiting, he who waits the most is going to be rewarded. It's going to take money away from the impatient people and it's going to reward all the patient people. So, nothing wrong with sitting on your hands for a few days. I'm definitely going to be doing that. No blown accounts formed against me shall prosper this week. We ain't doing that. We are definitely not doing that. Now let's have a look at gold. Well, before we do that, let's look at the sell side scenario. So the sell side scenario for the US dollar index is if we get bad US economic data. So that means lower GDP, higher initial jobless claims, and on the inflation side, cooling inflation, we'll see a break of structure, a new low created, a pullback into the zone, new lower high, and we will revisit the 97 handle. All right. And that is the downside scenario that sees Euro USD on the front foot, GBP USD on the front foot, USD CAD sell, USD ZAR sell, and that will definitely be a buy side scenario for gold. All right. I can't really pinpoint when gold will be pressure to the downside because the path of least resistance right now is to the upside, particularly if we see declining inflation, slowing growth, and higher initial jobless claims. And that is an outright possibility. All right. I'm not gonna put my house on that one. But we could see that scenario where we see bad US economic data and cooling inflation. And that is the perfect catalyst to see a weaker dollar. And when we see a weaker dollar combined with this geopolitical instability, it's the perfect scenario to see gold march on ahead and give us a new high. Now, let's look at gold before we close the show for today. Chat, what are you saying in the stream? What do you guys think so far? Let me just pause there actually. What do you guys think of how I've made sense of the critical data for the week and what it could potentially mean in terms of the scenarios for a weaker dollar or a stronger dollar? What do you guys think? Sipo Setsu says if core PCE continues to hover or drop toward the 2% target, currently trading around 2.4 to 2.6 in early 2026, it gives the Fed the green light to cut rates without looking like they've been giving into political pressure from the White House. Absolutely. Spot on, bro. Spot on. Again, comment of the day. You did two in a row, bro. You did two in a row. Impressive. I like that. Quality interactions. He says if PC confirms easing price pressure, so in simple English, if we see lower inflation data, bond yields are going to fall and the dollar could weaken, benefiting emerging market currencies and local assets. That's exactly what I said, guys. We've got some quality comments in the chat. I can't even lie. I can't even lie. We've got some quality conversations in the chat. Okay. All right. W's for seaport, W's for peace. Guys, listen. This is gonna be fire when you run it back on YouTube. I can't even lie. I can't even lie. Hey, yo, smash up those likes, guys. All right. Smash the likes if you're watching on YouTube. Smash up the likes. Subscribe, guys. Come on. What are we doing here? What are we doing here? Because I mean, providing all of this beautifully explained data with a clear narrative, with a clear plan, this goes even beyond me giving you a signal. This is better than a signal. This is helping you understand the why. Once you understand the why, you can give yourself the signal. You feel me? So yeah, smash those likes up, subscribe, share the video, share it with your friends, repost the stuff. All right, let's have a look at gold, and then we can call it a wrap. So we'll look at the yellow metal. All right. So first things first, ladies and gentlemen, we are stuck in this beautiful channel. All right. The upper end of our channel is over here, and it culminates in this double top, which is our first high, and that was late in 2026, all-time high on gold late in 2026. The bottom side of our channel starts at the bottom of the range as well, and then we continue to move to the upside. So we've got this beautiful channel that's hovering right there, and we've got our key points of interest that have led to bounces to the upside. And here we find ourselves yet again, boys and girls. All right, another week, and gold is still hovering near the up end of this upper trend line with a push to the upside. All right, we've had this range going sideways, a beautiful, a bullish continuation pattern, classic bear flag. I mean, textbook stuff here, textbook stuff, textbook stuff. We've got a break to the upside, and right now the path of least resistance lends itself to a pushback to the downside, might just come in intact with this trend line, and that is the upside scenario, creating a new high. And this is the scenario that the perfect catalyst for this scenario would be weaker GDP data on Thursday, higher initial jobless claims, as well as cooling inflation. All right. If we see PCE coming down from where it is, any signs of cooling inflation, the odds of a rate cut are going to be fully priced, not fully priced in. What am I saying? No, 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 no. Let me bite my tongue there. Let me reel it back in. No, manage my expectations. Won't be fully priced in, but the market is going to front run Jerome Powell. Okay. The downside scenario, guys, if we see GDP data that is showing a really strong economy, and we see initial jobless claims at really low levels, and we see on the geopolitics front a cooling of the tensions in Iran and a cooling of the rhetoric against Greenland, and lastly, if we see higher PCE inflation, ladies and gentlemen, we could break down to the downside, pull back, and make our way back down to around 4,320. That's what I believe. All right. Maluma Sam, don't do that, bro. That comment on Instagram, don't do that, bro. Kumpitsa ka number. That's crazy. That's crazy. Shout out to Maluma Sam. All right, I think that's a beautiful way to end it. Guys, what do you think of these potential scenarios on screen? Let me know. Let me know down in the comments down below if you're watching on YouTube retrospectively after I've gone live. And let me know what you think of this catalyst. And that's particularly if you watch it before Thursday, what do you think of the planning? If you're watching this after Thursday, let me know how it worked out. All right. I hope the future version of me that's watching this next week, Monday, looks at it and be like, yo, of easy, you a G. You predicted this down to the T. All right. So shout out future version of me that's watching this. All right. You're doing the most. All right, guys. Yeah, I think that's it. All right. Any more than this, I'm gonna start lying to you. And I don't want to do that. I only say that in every stream. I don't want to do that. I don't want a dollar. Don't make me dollar. All right. Chat, last round of questions, last round of comments, anything you'd like to add or subtract, and then we can land the plane. I think we can land the 747. All right. Sipo says 3 years plus watching the live streams. I must say, I never stop learning. That's what I'm saying, bro. It's always good. Tando says the biggest boss. It's been a minute since I've heard from you, fam. I'm still here, bro. I'm still here, bro. Check me out on YouTube. Check me out on YouTube. Check out the official live streams from Just Markets every single Monday. Check out my page, The Daily Pulse. All right. I'm still here. I haven't moved. All right. I haven't moved at all. So comments in the chat, guys. Let's end the stream. Think we've gone on for 30 minutes, surely. Surely 35. All right. 35 alive. Let's go. All right. All right. Nothing from the chat, guys. If that'll be it, then thank you for joining me. It's been a pleasure hosting you on the stream, guys. Lastly, run up those likes, grow my subscribers. Guys, I think I'm sitting on 300 and something subscribers on YouTube. Come on. I'm approaching 10,000 on Instagram, but I'm only on 300 on YouTube, guys. So do your boy a solid, run up my subscribers. All right, let's just get this out there. All right, I think I'm bringing quality. I'm coming through with the heat. I'm willing to wager. There's no market analyst in South Africa that can compete with me. Simply is none. All right, and if he can, send him right through. I'll be glad to sit down and have a conversation. But I know that my shit is the best in the game, man. I can't even lie. My approach, my narrative, the storytelling, the way I'm making everything make sense, clean price action, a clear understanding of macroeconomics. Come on, what are we doing here? So if I'm the best in the industry in South, I think I definitely do deserve the subscribers that validate that. You feel me? All right. It's not about the cars anymore. We've gone beyond the glitz and the glam and all the little shiny toys that are around the trading industry. All right. It's all about what kind of value can you add in terms of how you interpret the market, and is that going to be helpful to everyone else? Simply, simply down to that. Simply down to that. All right. Nobody cares what you drive anymore. Nobody cares how big your house is anymore. We want information that's going to change our lives. That's what the people are saying. All right. And I believe this is it. So, ladies and gentlemen, before I go off on a tangent about how dope I am, let's end the stream. All right. I'll see you guys later on in the week. Um, Good luck, guys. Manage your risk accordingly. Remember, trading is not easy, guys. If it was, I'd be sitting on the beach drinking a pina colada. I wouldn't even be streaming. All right. Trading is not easy, guys. It takes a whole lot of research. All right. It takes you applying the method. Like I said early on in the stream, we're learning some new things in real time because the action reaction function of the macroeconomic data versus the price action is not landing the way it usually does. All right. This is no longer an interest rate trade. This is a protection trade, a geopolitics trade, a trade that projects that there is slower growth in the US inadvertently under the hood and that rate cuts will inevitably come. Okay. That's the trade right now. And you know what? You can't buy these things off the shelf at Checkers. You just got to go through it to find out. All right. Bet. See you guys another time. Thank you so much for joining me. That was lovely, guys. That was really, really lovely. Top tier stuff. Thank you so much.